Hey, good morning. What's going on, traders? Hey, guys, I like to keep an eye on the spreads between the majors, as we call them. So, obviously, Bitcoin, Ethereum, Litecoin, and then Bitcoin Cash. I mean, you could probably throw in, I don't know, I think those are the majors. I don't think you throw in Ripple. I don't think you throw in Cardano. Those are, uh, they haven't been around as long. I don't think volumes there. Anyway, you could chart those as well. But the point here is we used to do this a lot in treasuries. It's called relative value trading, and do it a lot in the bond markets because a lot of times you're just trading the different prices across different durations. So you might still be trading one particular um, bond or security, but you're just trading the difference in prices because sometimes the front month will trade differently than a bond that matures further out in time. So you look at those different spreads, and you can also do it, 2 year versus the 30 year, that trading the yield curve like this. You can do it kind of across bond asset classes. So maybe you're trading a corporate bonds versus munis, but you look at the differentials in, interest rates, the difference in the rates between those different asset classes, and obviously your prices. But sometimes you'll get these different you'll get these allocations where um some something will widen out and these spreads will widen out, and then the idea is that they come back together. You have to trade this a little bit more directionally. It's not as simple as, okay, what's the cheapest, let's just buy it, and then always sell the one that's overbought. But what this does do, it's helpful to notice when something really stretches out from the mean. All right. And when you chart these charts like this, you use a percentage, do it on a percentage basis, and then it's helpful to start whatever you're comparing, try to get a point in time when they're all together. You start the chart when one's really widened out, it's going to look a lot different. I don't want to start when they're all relatively close together. But so here I have Bitcoin in yellow, Litecoin's in green, Bitcoin Cash is in orange, and Ethereum's here in purple. So when something's outperforming, it's going to stay on top, right? So Ethereum has been pretty strong last several weeks. Bitcoin's been kind of lagging. But what I care about is when something moves away in a kind of a dramatic fashion. So here you can see Bitcoin Cash pretty much went vertical. And then look how high it is relative to Bitcoin down here. See Ethereum, same thing. Litecoin, same thing. Just recently here this morning, Bitcoin Cash really kind of diverged from the rest of them. Right? Bitcoin looked pretty cheap here, especially relative to Ethereum. You can see I took most of my Ethereum off up here because of the spread between, just kind of was really far away, and then directionally it was right back into that 1400 level, that double top. So I look at it from a directional standpoint. I say, okay, we're back to the double top, the cycle's high. And then if you can get a feel for where you are, something's really rallied relative to the other majors, then that's just more information to help decision do. So I've actually been kind of eyeing Bitcoin Cash lately. And I think it's helpful to also to watch where something's come from. So when you're looking at these pairs trades or these spreads, see that, notice, here, um, Bitcoin Cash is kind of right in the middle, and then it crosses through Ethereum, and then look how, when something goes from here to here, that's stretched, right? Same thing with Litecoin here. Litecoin is below Ethereum and Bitcoin Cash, and then it crosses through two pairs and goes vertical. You guys see that? You can see here on Bitcoin cash, it was kind of in the middle, and it crosses through two pairs that were actually Bitcoin is kind of going this way, Litecoin's going this way, Ethereum was going sideways. But see how Bitcoin Cash made a move in the opposite direction? This was clearly down. These are still up. That creates that what I call it stretching, or spreads widening out. So at this point, you had a really wide spread relative to where it came from and relative to the rest of the pairs up. That was a good buy there. Um, Anyways, I think you guys can start to see that. You can also measure the distances. So you take, if you just want to measure it from Bitcoin. So here, that's about, you can't see it, but that's about, I think it's 11 or 12%. It's hard to read in there. Look at Ethereum here, right? Measure. That's 9%. It's hard to see it under there. You'll be able to see it here on Litecoin. Right? That's 10, 11%. The highs there. Bitcoin was pretty cheap here. You notice how I like to, look at Bitcoin on its RSI when the cycle's low and the RSI is low, but look at the spread between Ethereum and Bitcoin. So again, 6%. 9% between the low there and that high. Probably a little bit more accurate to run it from there. 7%. The spread. Now you're back in that 10, 11% range. So this was obvious that you wanted to be taking some Ethereum off, allocating maybe back to Bitcoin, or it kind of depends directionally how we look. But anyways, this is good to do, guys. I'll try to do this more.